Welcome back, family. Day 3. I wasn't able to make a video this morning, and yesterday I didn't make a video either because guess what? It was FOMC, and I was not trying to really be on a chart at all, and I'm just trying to really create a continuous habit of every time I tell myself I'm not going to get on the charts, I'm just not going to get on the charts, regardless if it's after market hours, regardless of anything. Because like yesterday, like perfect example, yesterday Asia went stupid, and me personally, I wasn't really, I don't trade during Asia, but like in the possible event that I was on the charts, I probably could have been sucked in, and that's just me being honest. Because Asia yesterday was moving like crazy, and when I see movement, I want to participate. So, even regardless of the fact that hey, this is Asia or not, I would have just went in there and there. I said in there. What did I just say? I would have went in there and I would have tried to participate, be part of that move. And although I probably would have won, lost, doesn't matter what the outcome was, but still, I would have been a little regretful of that decision that I would have made, even if I won. Just because that's not normally when I trade, and I'm not saying that trading during Asia is a bad thing. I'm just saying I personally don't really trade during Asia, and if I did, it's because I was prepping for that. So it's like I'm not about to go to Asia without, you know, knowing what's up. But I have been seeing that ICT's been dropping some Asia videos, and he's been making Asia a little more feasible for pairs like Nasdaq and any sort of indices like S&P 500 and US 30. But I would only be trading if those conditions that he's talking about are met to a good degree. So, but yeah, man. So today we went a little crazy. Um, we only took 2 trades, which is phenomenal. I'm very proud of myself. I stayed under my three, 3 trades per day rule. Um, Also, the way I manage my emotions right off the bat, like coming off that, um, the first loss that I took. So I took a L going short Nasdaq, and this morning I'll go over that, and then I changed sides because at the end of the day I was bullish. Anyways, I've been bullish. I wanted to take the short to see the short-term liquidity being taken, and then once that liquidity was taken, I was going to look for a long position. So I was trying to catch both sides of the marketplace, but obviously the short was very short-lived, and I got taken out. I got stopped with like a 8-point stop loss, or what was it? Wait, like 11 maybe? Yeah, 11 point stop around there, plus commissions and everything. Um, and then uh, and then obviously when I saw the disrespect of certain levels and the respecting of certain levels, and I was like, okay, yeah, I think they're just gonna take it to the top here. I was interested in this all week. I told you guys that the interest rates decreasing would call for um, dollar to seek the interest yield as it always does. Dollar seeks yield, if you guys don't know that. And because of that, if interest rates go down, dollar is going to go down. Also, that means for Nasdaq that Nasdaq is going to be bullish. So I know that a lot of people are probably looking at this fair value gap, aka breakaway gap. You guys are probably looking at this like, oh, this has to be filled in later on, quickly. They're gonna go down here and things like that. But that just wasn't the case. Like, we're very cognizant because of the intermarket analysis of the interest rates. Um, this was gonna happen. Also, they also to just give you guys some context as well. This is the first time in a long time that we've seen a 50-point basis decrease in interest rates. Um, all last year, we just saw a continuous 25-point basis increase, 25-point basis increase. And that made sense for NASDAQ to be bearish during those times. And there was even a time where NASDAQ wasn't listening to that, to the fundamentals. It was just going higher, going higher, going higher, although, the interest rates kept hiking. They kept hiking up, boom, but they still didn't care. And then there was a time where they just didn't move they didn't decrease or increase. They just kept it the same as far as the interest rates goes. But this is the first time in a long time that we've had a 50-point basis decrease. And like I said, any sort of increase or decrease was always 25-point basis for the whole entire last year and the beginning of this year. And is really good for us who know about that to trade in coherence with that. You know what I mean? Because it's like, oh, that's like a billboard screaming, like, oh, look at me. I haven't increased or decreased or moved at all 50-point basis in a long time. But look at me. I'm doing it now. Like, look, trade me, trade me. That's kind of what I see when I like heard about that and when I saw what was the probability of the 50-point base decrease. So that means the dollar is bearish and Nasdaq is bullish. That's all that means to keep it in layman terms. Um, Here we had this buy side liquidity, so I was very eager to see them take it above here. Like that's what I want to see at the end of the day. But as a low hanging fruit and just following probability, I looked at this here. And if you guys don't know what this is a rejection block right here. This highest up close candle has all the liquidity stored within here. And so they also had an internal failure swing. The highest internal failure swing after a rejection block is a high probability failure swing. It is the highest probability of a failure swing. And I was looking for that. And it happened there today. We closed below that. So what I'm interested in seeing tomorrow is if we're going to continue higher or we're just going to stay consolidating or we're just going to rebalance a little bit and go lower. So I'm going to be aware of that. Today was a large range day. So tomorrow might be like a short term, like a short range day. But the problem with that analysis is that I wouldn't be considering Monday, Tuesday, and Wednesday. And Monday and Tuesday and Wednesday were all ranging days. And so if the first majority of the week was consolidating and just staying stagnant inside of here, then this could call for a nice range tomorrow as well. And I think tomorrow could even be more healthier than today on Thursday. So we'll just have to see what the morning session gives upon us. I'm not really going to make any prediction or guess, but if I had to say something of where is it going to go, if you guys grant me that authority because you're watching this, I would then say possibly if I had to choose, I'd probably pick them going here to this. It is possible that we could even see an immediate rebalance, like a large wick here during London, and then them just running higher throughout New York. Or we could even see like just a small retracement here, like to a fair value gap possibly in here, and then them just going higher and then finally taking this and then closing there for the week. If they end the week here, like with a bullish closed body here, that'd be perfect. That'd be a perfect trading day for me, and possibly the closure of a week, and then next week we could possibly see some rebalancing going on here, unless Nasdaq just wants to scream to this for value gap, which is also fine as well, and that's where I've been pointing towards. Maybe within the last 2 weeks, 3 weeks, I've just been looking at this ever since we came and we respected this failure swing in here and we respected this order block here. But I'm also not afraid for it to come here short term and then allow us to reach up into this overall coming into the next quarter. So it being the new rollover of the contracts in October, I'm still aiming for this fair value gap up here. So we're getting close to it. I'm very, very positive that we are going to reach into this. And then from there, we'll decide what else price is going to do. I'm never going to say that price is going to go above these highs, but this fair value gap is definitely on the menu for me. And that is my daily input for that one. Let's go to the 4 hour. The 4 hour for me is one of those time frames, as you guys know, the 4 hour for me is a time frame that just gives me like kind of like higher time frame narrative and like direction. It's not like a place where I'm trying to get in, do anything. For me, this is just understanding the bigger picture. Sometimes with the daily candles, you can't really see the order flow as clear. So you'll go down to this, or sometimes on daily you can't see the order flow is clear. So then you'll go to the weekly. So it's like a positive relationship or a symmetrical relationship between the weekly and the daily and the 4 hours. So it's like whichever one looks better between these three. I'm gonna bounce around, juggle around, and see where price is really trying to reach for, and what is it really doing, and what is it? What are the bodies and the direction and speed of the candles? What are they telling me? And so those are some of the things that I am looking at. Um, but yeah, um, I was looking at the 4 hour. We took this out here, and then we went higher, and let me just put this back on. So this is Monday and Tuesday's range. I treat this very similar to overnight session, buy side liquidity, sell side liquidity here. And so with this picture in mind, FOMC, they take it, they scream lower, take this liquidity here, but they stay inside of Monday and Tuesday's range. And then we finish off with Asia, which is Wednesday Asia when it went crazy. We finish off closing above this. And this spoke direction and intentions of where they wanted to take price. So that was very, very key and eye opening. Here, as you guys know, I have a 7 a.m. or 8 a.m. or 9 a.m. filter. And what that simply does for me is that the 7 a.m. or 8 a.m. or 9 a.m. candles are always bound to take liquidity. And for the most part, 8 a.m. and if you're trading, New York time, which is UTC -4, I'm using UTC -5, then you would be looking at 9 a.m. And if you do, logical thinking and reasoning, of course, this would be the case of, price increasing in volatility after 8 a.m. or 9 a.m. It's because obviously the market opens during this time. But one thing that happens all the time that most people don't realize is if you stay and keep yourself on the 1 hour pre-market and you just draw up where the liquidity is before market open, then you would know what liquidity points price is reaching for. Here we have sell side liquidity and a fair value gap as well on the 1 hour. And I was not going to choose any of these fair value gaps here. You are probably looking at this like, oh, I was waiting for them to go all the way back down here. But something that you'll learn over time is that, it's all relative to where the opening price of the current session is at. So if New York opens up here, and I know that we have buy side liquidity up here, what good does it do for me to draw up a fair value gap like this all the way down here and still expect them to take out buy side liquidity within the same day? Even if I said tomorrow, it's just very challenging for price to run up such a large move both ways, because if we open up here, we have to run below 200 plus points, and then to go back above as well is going to be 131 plus the 200 plus points. So you're talking about 200 down, 300 up. It just doesn't make any sense. So you as a mature trader have to finally come to the conclusion that, hey, relative to the proximity of this morning's opening price, relative to where that 8 a.m. candle is at, or 9 a.m. candle UTC -4 time, that 9 a.m. candle relative to where we're at, is it realistic to see them go all the way down here and still expect this buy side liquidity to be targeted? And if you're conscious and logical enough and you've been around for quite some time, you'll start to understand that before, when you first start, you're worried about annotating without actual context. As you get older and more mature in your understanding of price, you then start understanding context from a much more realistic standpoint. And these fair value gaps for you, if you are also paying attention, these would also remain as breakaway gaps for now. Again, this is all a balanced price range in here. So them going up here is sell side, buy side here. This is price passing through, meaning that this fair value gap should remain open. Although it looks amazing, it has an order block in there, a large wick, 50% consequent encouragement. You have the fair value gap as well. Nice and dandy. But understanding it from a contextual context perspective, reaching for this fair value gap or anything under this high is a problem. And so what I do every morning is I always note where the 8 a.m. opening price is for me. And for those, and most of you who are trading the UTC -4, you guys would have this as 9 a.m., which I'll make it just for, video's sake and for the pleasure of you guys. If you see here, this is 9 a.m. 9 a.m. always runs into liquidity, and then the biggest signature of a continuation move is sell side liquidity or buy side liquidity being taken with a fair value gap under or above. So in this case, we're bullish, so we wanted to see sell side liquidity being taken, and them in the process of taking sell side liquidity, they would also reach into a fair value gap on the 1 hour or the 4 hour. And this, my friends, has served me as a well barometer around the H1, H4, and that's like the whole entire purpose of these two time frames. And I wanted to teach this more into depth, but I think that everything that I was going to teach in that video is pretty much covered here, and it would just be redundant for me to make the other video. But I still might make the other video just because people are not going to watch one of my journal logs, although there's still valuable information in here. So it's just some of the things that I have to deal with as a instructor or a teacher or someone who just shares his journey on YouTube. But yeah, whenever you see a fair value gap with sell side liquidity right below or above opening price, you always want to see them reach into those things. If we're bullish, it's going to be sell side liquidity and a bullish fair value gap. If it's bearish, our bias, and we want to see a bearish fair value gap, buy side liquidity. And that measure has to always happen at around 9 a.m. or it has to happen at the next candle, which is 10 a.m. These two candles right here would serve you as a barometer of price's direction. If I know that sell side liquidity is being taken and we reject off this fair value gap, and I see like them disrespecting bearish signatures, I know this is strong. Like, this is telling you a lot. Look at where the body is closing, right? We come down and the body closes here, right? The opening price is right here. And you see how they just don't want to close inside the fair value gap, and they're really trying to leave. And that right there, my friends, gives you a lot of information. Keep in mind, this was the last high inside of the marketplace, and they left this fair value gap as the only fair value gap near this high or buy side liquidity that was taken, which was FOMC's high. This fair value gap was already reached into, and we've been running higher ever since. All of these candles have already rebalanced anything that was left open here. And these candles, this is why we have these wicks that are coming down. They keep coming down, closing above, coming down, closing above, coming down, closing above. And that right there is speaking volume. And like I said, this right here is passing through bearish price action, and this would remain open as a breakaway gap. And then when you have this type of price action there, you get to see my perspective now. So now if we go down to the 5-minute, you'll get to see that for those who are like overnight session doesn't work. So let this be a teaching for you. Does overnight session have to take does overnight session have to take sell side liquidity and it's already taken buy side? No. Well, why is that? I thought it has to take out both sides. Well, if we have the hourly, which has more parent authority over the 5 minute and anything that's in this range, the overnight session is only going to be in confluence with the 1 hour and the H4 when it comes to fair value gap and sell side liquidity. Overnight sessions equilibrium being here and the sell side liquidity being here and the fair value gap being here and them staying above all of this speaks so much for us who are engaging in this price action. And is it possible for them to likely go below overnight session? Yes. But if we were bullish, that would have not been a strong bullish signature. And seeing them take this here would have been problematic for us during the morning session. But them coming down to the sell side liquidity, fair value gap, then closing above, staying above all this, even overnight session equilibrium, this right here speaks volume. They formed an order block here and they took it higher to the buy side liquidity, and that is one standard deviation of the overnight session above, and there matches with this. The standard deviation and the buy side liquidity match. They're in the same area, so this is major confluence of a target for liquidity. I didn't use the 5 minute to really enter price at all. So I'll just go back to the 5 minute to just talk about what I did see and what was my worry this morning, or why did I take the short. And so I knew this large bullish move was coming around the corner. I didn't know exactly if it was going to be during the morning session, afternoon session, but since I trade the morning session, obviously I'm going to anticipate it to happen in the morning session. And there was also news at 10 a.m. so the volatility was set for this move to happen. It was an orange folder, and that made me, trust in the morning session over the afternoon session when there is no news, no volatility, and it would be the day after FOMC that they would do it. And of course, they had a large bearish move for OFMC, and I see how this can confuse a lot of people. And if you don't know the fundamentals of the point basis increase and you can't have that understanding for the intermarket analysis, then you would be struggling during this morning and thinking that would be bearish. If you're looking just at overnight session, you would say, oh, we took out buy side, now we're going for sell side. And you have to look at it more from the probability and the chances of all these things occurring, and all the markers or all the highlights were pointing at a higher NASDAQ this morning, especially fundamentally, which is what really, really made this trade just an A+ setup. So initially though, because I knew that the bullish expansion was coming up for rent, they were going to come and do what they had to do. Honestly, if you guys don't know how NASDAQ moves yet, NASDAQ likes to take out liquidity first and then expand aggressively the other way. And so I was betting on that, and I wanted to see this being done here. We had a change in the state of delivery with these candles here. They were showing bearish order flow here for a little bit, but them staying above this, I didn't realize this on perfect time because this 9 a.m. candle took out both sides. So it was hard for me to read this, but I didn't want to disregard the short because the sell side liquidity was down here, and it still would have been ideal for them to take the liquidity and close above all this still, but just had it, this sell side liquidity being paired for these very expansive longs. But they didn't do that. This fair value gap was on the mini for me. And if I can put it here, this bearish fair value gap, I wanted to short this. So I put my stop above this fair value gap because I didn't want to risk putting my stops above here because I knew what the possibilities were. So I just put it above this fair value gap. If it disrespected this fair value gap, well, I was wrong, and that was fine, and I was wrong. So I saw this reaction here, and then I shorted this next candle here. Some of the things that I also saw how this was the order block that took liquidity here. So this was also very interesting for me. This is another reason why I decided to not be so aggressive with the shorts and allow myself to be wrong, because it was giving me a lot of information. And these are one of those times where ICT would say you were just paying for a premium for more information. And we need that sometimes. And so if I go here with the fair value gap, as you can see, they closed above this order block here. If you know where the liquidity is at, you know where fair value is at. If you know where fair value is at, you know where your order blocks are going to form. And so then, my friends and family, this close above this candle here is a change in state of delivery. This is also a market structure shift. And them coming down into this fair value gap here and respecting it was speaking a lot when I was shorting this, because I was like, they're incapable of taking this lower. And if you could see why, it would make sense. Then they made this 5-minute fair value gap an inverse fair value gap. We closed above here, and then we come down. One of the things that you would see in the screenshot that I posted in the community tab is that I also had this drawn up here, and I also had this last order block up here drawn out. Reason why I would have these levels drawn out is because these are still bearish signatures that I have to be aware of. And so a lot of people, you know, we have the tendency of getting very biased in the way that we want to see price move in or direct itself in, that we forget that a bearish order block is still a bearish order block. And you respecting that as a trader shows your maturity to be able to adapt to being wrong, because there is a reason for price to move against you and for you. And so if I saw a bullish reason and a bearish reason, me being a mature trader and being focused on what the market is providing as far as information within price action, then I would consider both sides available to me and valid reasons to make a educated decision. All right. Here we had this run here. One of the things that I am pointing you guys towards is 10 a.m. opening price. This 10 a.m. opening price is like magical. Reason being is because you're going to see what we're going to talk about right now. If I go to 8 a.m. filter, I'm so surprised I haven't made a template for, well, we'll make it right now. 10 a.m. open. And I'll make this 10 a.m. Cool. We'll save that. And so as you guys can see, we have 10 a.m. opening price here. And isn't it funny how we close above this inverse fair value gap now? We close above the fair value gap, then it becomes inverse. So now it's inverted. It has the potential to act as a bullish support signature. Then we have 10 a.m. underneath that inverse fair value gap. The wicks come all the way back down to 10 a.m. but close above the inverse fair value gap. This right here, ladies and gentlemen, let me just zoom in real quick. 10 a.m. is used as a barometer, as a measuring bar to understand whether if price is truly bullish or not. Them screaming here and then rejecting off of it like nothing has happened and staying above this inverse fair value gap, the bodies are respecting it so much that none of the bodies closed inside of it. We have an order block here. These two down close candles became an order block here, and we're also staying above that. And this order block is also near the consequent encouragement of this inverted fair value gap. and we have 10 a.m. price rejecting and leaving 10 a.m. Like we're leaving it behind. Like this is like, if I can put it, like into perspective, it's like, um, let's say John is trying to meet with Jack. John wants to see Jack, but he's on a time crunch. And what's going on with John is that as John is here, he runs to Jack. He quickly taps Jack's hand and says, "Hi, bro. I love you, bro, but I gotta go. Like, I gotta go. I got somewhere to go." This is like what that is telling you. If I could illustrate it to you in a way that you would understand how 10 a.m. works, you know what I'm saying? Now, if 10 a.m. is present and Price decides to play around and flirt with 10 a.m. a lot, it's like a man who's trying to have a conversation with a woman. He's going to stay there for a long time, or as long as he can. And them leaving this was like, yo, John or Jack, I love you, Jack, but I gotta go. So let me quickly dap you up. Let me say what's up to you. Let me high five you, whatever it is. Let me pound you real quick. But bro, I gotta go. I'm gonna talk to you soon. Where are we going? We're going to the John liquidity. And that's exactly what's going on here. They came down, tapped it. Oh, I gotta go. Then they're closing above here, and then they're moving higher. Remember how we were speaking about the breakaway gap on the 1 hour or the 4 hour? And we were saying that whenever there's both sides of the party available to us and they form a fair value gap within that same range, that would be a breakaway gap. Well, literally, this is exactly what happened. I also have been trying to show you guys the idea of the liquidity on how, what are low probability liquidities and how to avoid them versus high probability liquidity. High probability order blocks that are under liquidity. That's what I meant. So order blocks that are near liquidity, which ones are high probability versus low probability. Here we have a minor or a small mile marker, as we call it, or a minor liquidity target within more liquidity targets. But one thing that I love that they did here was that we had an order block underneath this buy side liquidity. We see the bullish signatures. One of the things I really love that they did today, which made this a high probability long here, was that number one, there was a breakaway gap. That's the first contextual thing that I'm looking at. If I'm looking at context, they're forming a breakaway gap. It would make sense for them to form one here. They went here and didn't take the liquidity and traded down to the order block before they took out this liquidity, making this high probability. If the order of delivery was that they would take the liquidity first, then reach down into the order block, probability decreases. So what they did was they went up here. They said, wait, before we actually get there, let me quickly go get my wallet. They went down, got their wallet at the order block opening price right here. So let me draw it out for you guys. Right here. And that would set the stage up for them to leave this as a breakaway gap. So when I took this long, my stop was below the 50% of this candle. Although I knew it was going to be a breakaway gap, I didn't know how much of a breakaway gap they were going to leave open. So my job was to have this quote unquote breakaway gap, putting my stop below the consequent encouragement. And I trusted it with, obviously, that idea and narrative. And then we came above this liquidity. We snapped back. Again, when price in NASDAQ takes liquidity, or when price meets liquidity, it has the possibility of reversing. So you have to accept that risk. You here would have either put your your stop loss at break even, or you would have let price continue higher and not worry about your stop. But a lot of the times you have to put your stop at break even when liquidity is taken, because it could just come back and take you out and then some, and just completely reverse this entire move. So one of the things that I saw was that they came here and then they took out this liquidity, again leaving this breakaway gap open. They took out the previous candle's liquidity, left a low resistance liquidity run right here with these two candles high on a small time frame. It looked very pretty. I know that for sure. And then they went higher, and then this reaction here, I had said to myself, well, if they respect this signature and price right here, we have buy side liquidity here. Unfortunately, it's too big, so I have to do this. We have buy side liquidity here. We close above it, but also there's still this bearish order block here. We're not closing above that though. But look at this. Within here, we have a fair value gap, as well as the 50% of this candle's wick, which comes in, if we can eyeball it, around right there. So these were my two areas of, you would say, filters or parameters to see if price is really still respecting the bullish signatures. And them coming down to the consequent encouragement of this wick here, and then respecting this fair value gap here, not even closing inside of it, gave me every reason to just trust my setup and put my stop at break even. And I knew we were going to just scream through here, because if we are doing this, and this calls for a strong bullish signature. And it was just showing all those strong bullish signatures today. So boom, it did that. And then again, we have another high here, right? Now I can put buy side liquidity. So this is actually an external buy side liquidity point. It's coming to 36 minutes, guys. I'm so sorry, but I'm very passionate about this stuff. Buy side liquidity is taken. We have a fair value gap forming exactly at the buy side liquidity. We're not coming below this buy side liquidity, and we're staying above the consequent encouragement of this wick. This was setting up all the stages for a continuation move higher. Then they came here, screamed with this candle. This was an immediate rebalance, order block right here, and boom. Then we had price come all the way to the 1 standard deviation of the overnight session, and then it forms an order block there at fair value. We also took out that liquidity on the daily time frame. You also could have took this as a short. I wanted to take this as a short, but I didn't. I didn't because I had done even more than what I wanted. So for me, not being greedy and just being content with enough, I just let this whole trade play out without me, and it was a very beautiful trade. Again, if you know where the liquidity is at, you know where fair value is at. If you know where fair value is at, you know where your order blocks are going to form. This is your highest up close candle. Them taking it here, this is an official change in the state of delivery, including this fair value gap that now has become a balanced price range. We have buy side and sell side within here. This becomes a balanced price range. It set the stage up for a brick wall to go lower, and that's exactly what price did. Some of the things that I'm very proud about myself was the ability to anticipate the breakaway gap this morning, and also being able to manage my emotions as I was taking this short right here, and I failed to read price action correctly from this point on. But then when price was developing and it was showing me its signatures, I was able to make an educated decision. And I love how 10 a.m. today provided a lot of confluence towards their bullish signatures, and I loved how everything was panning out. This is honestly, today was like the epitome of how good trading can be when you know what's going on. And it wasn't just because, I made money. It was literally because there was so much signatures of bullish price action being left behind that it made those who trade with this perspective comfortable to be in these positions. And so, yeah, I am very proud of my performance today. I didn't allow myself to overtrade. I stayed within my rules. Also, I was open to seeing the other side pan out. And if it wasn't for that adaptability and the ability to be open and have an open mindset, if I didn't have that mindset coming into today, I probably would have not performed as well if I was only looking for bearish prices or if I was only looking for bullish prices. And so I'm very proud of my performance today. On today, we are currently back in profit with my personal live account, especially for the week. And we are above from where we started, which is a great thing. I've only had this live account for since last week and this week. So I just put $1,000 to play, just because I feel like I was out of tune with price action for quite some time. And so now I am getting back the ground in my feeling, and it's feeling good. So yeah, guys, I hope you guys enjoyed. Sorry for the long video, but if you guys paid attention, there was a lot to take out of this video. It was very insightful, and hopefully you guys learned something new today. And hopefully tomorrow is as good as today, if not better. And if not at all, then hey, we just have to be content with the opportunities that we have at hand. I would also tell you guys, don't try to force the hand, because remember, we are in the quarterly expiration month. So this month is loud. It's going to move. Next week is going to be amazing. The week after that is going to be amazing, all the way possibly into the first week of October. So the volatility filter is here. The month, the time to be trading is here. So do not get discouraged. If you lost a trade today, don't ruin the chance of you taking on a combine challenge and potentially passing it, because the next couple of days and weeks are going to be very fruitful and very opportunistic. And if we are perspicacious, which is the viewing of opportunity, if we're open to see opportunity, then we will find opportunity in the upcoming days and weeks. And I just want to tell you guys that I love you guys. Thank you for always supporting. Again, this was a phenomenal day for me in my journal. I'm very proud of myself and how I managed myself, not because of the money, but it was because of my confidence that I gained through my ability to read price action a lot better today, and not so much trying to be correct, but more in the sense of reading its signatures and what it's trying to tell me. And so I would challenge you guys all to be open during your morning sessions and allow yourself to be fluid in both directions, and just learn how to read price action little by little. It is not a race, it is a marathon. And God bless you guys all. Just remember that God is good all the time, and you're good. What is it? Man, I forgot the quote, man, but see you guys. Have a great day, and I will see you guys tomorrow.